If you're like us, you're probably tired of flipping through outdated and expensive regulation books and struggling to understand the rule or guidance you're after. eRigs is the first web and mobile app version of the Federal Motor Carrier Safety Regulations, helping fleets of all types and sizes better access and understand their regulatory obligations. eRigs is always up to date and allows fleet safety professionals to not only read the rules, but also dig into FMCSA guidance and learn more about complex regulatory topics from industry experts. Highlight, bookmark, and take detailed notes right from the app and access them on any of your devices. And easily share a digital version of the regulations with your drivers so that they too can better understand the rules. eRigs was developed by safety professionals for safety professionals. Try it out for free at erigs.app. Hey everyone, welcome to episode 40 of Trucksafe Live, the show where we and our guest tackle the hot button issues impacting highway transportation. I'm Brandon with Trucksafe and Childress Law, both of which are dedicated to helping motor carriers develop and maintain cutting-edge safety programs. Looking forward to today's show. Been wanting to do this topic or cover this topic for quite a while now, all about insurance and what fleets can do to best position themselves for placement with a new insurance carrier or renewal with their existing carrier. So excited to have a special guest on with us today to talk about that in a little bit. But first of all, a few things to talk about here before we get going. Also, if you're here with us, say hey in the chat. We'd love to know who's here. Let us know where you're watching from. And obviously, as always, if you have any thoughts or questions about the topic that we're discussing, throw them in the chat and we'll get to them as you raise them. First of all, I want to say big thanks to the sponsor of this episode, which is Taking the Higher Road, a Legacy Builders and Freight Waves production. Taking the Higher Road is a special podcast dedicated to addressing the trucking industry's greatest challenges, driver recruiting, retention, and compliance. Each week, host Jeremy Raymer, 20-year industry veteran and founder of Driver Reach and Legacy Builders, interviews industry thought leaders who bring their insights to the driver life cycle. Be sure to check them out wherever you get your podcast. Thanks to Thanks to Taking the Higher Road for sponsoring this episode. We really appreciate it. A few things going on at Trucksafe, always worth mentioning here. First up, we'd love to have you join us at our upcoming Trucksafe Fleet Compliance Boot Camp. This is our 2-day in-person conference that we hold a couple of times a year. Our next one is going to be September 25th and 26th in Indianapolis. Join us for several sessions all about DOT compliance. We're going to be breaking all of the main components of DOT regulations down: driver qualification, hours of service, vehicle maintenance, drug and alcohol testing, CSA scores, all of that fun stuff. We'd love to have you there. We usually have around 60 or 70 safety professionals there in a group, and we talk a lot about improving your policies and procedures and developing an overall robust safety and compliance program at your fleet. So you can find out the details. Register yourself online at trucksafebootcamp.com. Seats are filling up, so if you want to join us, please register as soon as possible. All right, that's the Trucksafe Boot Camp. I also want to mention our Trucksafe network. If you're not a network member, I recommend you join. This is the space that we've built for safety professionals to gather together, learn from one another, ask questions, and also access all of our DOT-related content, including our videos, articles, webinars. We're in the middle right now of a 7-part free webinar series all about improving CSA scores. We just wrapped up our fourth one in that series this week, and network members have access to that along with all of the resources that we've developed to go along with it. Again, free to join. You can do so over at trucksafenetwork.com or scan that QR code and download the app in the App Store or the Google Play Store. Would love to have you there. So check that out. Okay, enough about us. Some other things going on in the industry that are worth mentioning over the last few weeks here before we move on to today's topic. First up, I saw this come through either last week or earlier this week. The FMCSA has announced a new deputy administrator, or has appointed a new deputy administrator. Article here says U.S. Transportation Secretary Pete Buttigieg announced Vin White as the deputy administrator of the FMCSA. He will also serve as the agency's acting administrator. A member of the Biden-Harris administration since 2021, White also currently serves as the U.S. DOT's acting chief artificial intelligence officer, where he oversees implementation of an executive order to advance and govern the development and use of AI in accordance with the administration's guiding principles and priorities. So this announcement came alongside, I think they also appointed a new general counsel, the FMCSA did, and I believe her background as well was in technology. So you can kind of get a sense of where the FMCSA is moving here with the appointments to their upper offices here. Clearly, they're going to have a more heavy focus than they have historically on artificial intelligence things. I got to think that this is positioning them to do more when it comes to autonomous trucks and technology installed in the trucks that our fleets are operating. So we'll see how that goes. I don't know Vin White. I haven't had any experience with him in the past. So we'll see what his priorities are here in the coming days. So that's the first article I wanted to mention. Second thing I noticed come through earlier this week was that the FMCSA is kicking the can on some of the rulemakings that we have talked about in the past. Some of the rulemakings that were supposed to move forward either this year or early next year have been moved down the road, which is not all that surprising, frankly. As we've talked about in the past, this is an election year, and administrative priorities tend to change around this time of this cycle, and we see things start to get kicked down the road a bit, and that is what is happening now at FMCSA. This particular article is mentioning that according to the FMCSA's spring 2024 Unified Regulatory Agenda, FMCSA is now projecting a May 2025 publication date for the speed limiter notice of proposed rulemaking. You'll remember, maybe, that this rulemaking has been in the works, I think, since 2016, if I'm not mistaken. We've seen talk about a mandatory speed limiter rule since that time, and to date it just hasn't ever moved forward. It's gotten a lot of blowback in the rulemaking process. A lot of folks, thousands of folks, have filed comments, mostly negative from what I could tell, against this rulemaking, but the agency persists with it, along with, this would be a joint rulemaking between the FMCSA and also the National Highway Traffic Safety Administration, NHTSA. And so anyway, we were supposed to see it this summer in 2024, but now it is being kicked down the road until next summer, at least, May 2025. Let's see what other rulemakings are getting kicked down the road here. Well, apparently I can't because I'm not a subscriber to this particular publication, so I've hit a paywall. But the other ones that I know that have been kicked down the road here are the automatic emergency braking rule. We were anticipating a final rule that would have mandated AEB technology. We expected that late last year and then certainly earlier this year, but it's my understanding that one has been kicked down the road as well. And we've got several pending rulemakings that we would have expected to have progressed at this point, including things like the proposed changes to the safety measurement system, CSA score platform. that wasn't a rulemaking, but it was something that the agency said in early 2023 that they were going to do, make these pretty sweeping changes to the way that carriers' CSA scores are calculated. And to date, that we haven't heard any more on the progression of that particular initiative, and I have to imagine that it is being kind of sidelined for now as well with these others, along with potential changes to the safety rating methodology. You may remember earlier this year, the FMCSA published an advanced notice of proposed rulemaking. Actually, I think it was late last year that they published that, where they indicated that they were thinking about making sweeping changes to the way that they calculate carrier safety ratings, satisfactory, conditional, unsatisfactory, those types of things. And they have already held, I think, 2 listening sessions on that proposal. I haven't been able to attend either of those, so I'm not exactly sure how they went, but they have another one scheduled for the end of July. You can find the details for that on the FMCSA's website, I believe, if you want to join that and listen into what the FMCSA may be thinking in terms of how it might change the way that it rates motor carriers. I'd recommend you do so. I will attend it, and then we'll probably have a podcast episode about that later this year. Spoiler alert, we've talked about this on other shows, but they are probably thinking about moving towards a system that scores motor carriers, at least in part, based on their roadside performance. Historically, safety ratings have only been driven by on-site or off-site audits, where the FMCSA is actually reviewing your compliance-related records, and based on the violations they discover in those records or the non-existence of violations, that's what ends up giving you a rating. And so practically what that means, because it requires an audit, the vast majority of carriers in this country are not rated because the FMCSA just does not have time or the manpower to go around and audit any significant number of motor carriers. So I think upwards of 95% of the 700,000 plus motor carriers that operate in the U.S. have no safety rating. And that's a problem, obviously. And so the FMCSA is trying to figure out a way to revamp the way that they rate motor carriers, one of which is to potentially tie your safety rating to your CSA scores. I've got a lot of concerns, a lot of heartburn about that prospect, given what we know about CSA and what we've observed over the years about how it works. But that if they end up going that route, they will hopefully implement the changes to the SMS that they've proposed, and hopefully that will take care of the major problems. I don't know. I'm not holding my breath about it, but we'll have to wait and see. All right, lastly, I just wanted to mention that earlier this week, we at Trucksafe published an article on the topic of multiple employer drivers. This is a topic that comes up pretty frequently for us and for our clients, where we have drivers who are working for more than one regulated motor carrier on any given week. We see this quite a bit in certain segments of the industry. A lot of drive-away, tow-away drivers work for multiple different carriers at a time. Also temporary drivers, so drivers that are working for a temp agency or a driver leasing company. They may be working for multiple motor carriers in a week. And so the question comes up, what are the obligations? What are the regulatory obligations for motor carriers that hire those drivers temporarily? What is anything different about the way that we have to qualify those drivers or the way that their hours of service works? And as you expect, it is different in those contexts, and you got to be pretty careful about it because, at least in our experience, we see a lot of gaps in those processes in that context where drivers are working for multiple carriers. So there is some nuance to it, and there are actually specific regulations that detail how this process can work for qualifying multiple employer drivers or drivers furnished by other motor carriers. So we put together a video on the topic, and we drafted a detailed article on how it is supposed to work and some of the gotchas to look out for in that context. So you could check that out over on our website, trucksafe.com. And also be sure to subscribe to our newsletter, trucksafe.com/subscribe. That's the best way to keep up to date with everything we've got going on. And we're constantly sending out information on breaking regulatory news and our analysis of it. So subscribe to that if you haven't already. All right, let's move on to today's topic, which is insurance. Everybody's favorite topic, right? So obviously insurance plays a critical part in regulated trucking, whether we like it or not. Federal safety regulations mandate that for-hire motor carriers maintain certain levels of commercial auto liability coverage and file proof of that coverage with the agency. Now, carriers have long lamented the costs of coverage, and it continually ranks in the top 5 operating expenses for fleets across the country. But it's one of those things that you hope you never have to use, but you better have the right types and the right coverages in case you ever do need to use it. Really should go without saying, but safety and compliance are topics that go hand in hand with insurance, and so that's why we wanted to hit on it in today's episode. And we are excited to be joined today by Mr. Brandon Minert, president of United Commercial Insurance. Welcome, Brandon. Uh-oh, I got you muted. Sorry. Welcome back. Anticlimactic there. Sorry for that.
There you go. Glad to be here.
Hey, appreciate you joining me, and looking forward to the discussion today. By the way, I think this is correct, but I've been informed that today is the National Insurance Nerd Day. Have you ever heard of this?
Is it?
Are you celebrating?
We should. If I was nerd enough, I would be, but I didn't know that. So, yeah, no, it's a great day then, man. We should all celebrate. Right?
Yeah, congrats. This is your day. So anyway,
everybody should read their policy documents today in celebration.
Yeah, that should be mandatory on Insurance Nerd Day. Everybody pull out your policies. If you can find them, dust them off, read through them, and cry some tears for having to go through that. But anyway, hey, Brandon, for those not familiar with you, I wondered if you could start off by kind of giving us your background and how you found yourself, at least partially, in the transportation industry.
Yeah, absolutely. So United Commercial Insurance, it's an agency that I started in 2013. I've been in and out of the trucking industry my whole life. In fact, my dad, he was long story here, he was a JAG in the Air Force in the 80s and the 90s. And what happened was he kind of was dealing with drug and alcohol issues with airmen in the Air Force. And when he got out, so a JAG is an attorney, and when he got out was about the time some regulations came into trucking. And so he started a drug and alcohol third-party administration company. And he catered a lot of it to trucking industry professionals because Reagan, created the regulations for drug and alcohol and all of the different things that came involved with running a drug and alcohol program. And he was familiar with at least the government side of it. So he came in and started a drug testing company based out of Boise, Idaho. And so that's sort of how I grew up. My dad drug tested me through middle school and high school and all throughout. But out of college, I ended up working there for a little bit of time. We worked with large fleets. We worked with large employers all across the Northwest. We're based in Boise, Idaho, this insurance agency is. And so for 6 years prior to starting this agency, I worked with carriers, setting up, running, coordinating drug and alcohol testing programs, doing trainings on how to comply with regulations there. And then from that, I, wanted to go out on my own. And I said, insurance was something that is nerdy enough for me to do. And so I started that in 2013. We have grown quite a bit. We represent most insurance carriers all over the country. We're in almost all states. We don't do Alaska, Hawaii, and a few states in the Northeast, but we're in 46 states. We represent, like I said, most major carriers. We have a couple thousand customers, and we're really well experienced in the trucking and transportation industry. That's our specialty. That's our niche. United Commercial Insurance. We have 21 employees here, including myself. And yeah, that's kind of us in a nutshell. We like insurance. We're here. We're young. We're growing. We just kind of like what we do.
Nice. Yeah, and genius move by your dad there to for any parents out there. This is an idea for you. If you've got kids that are in high school, start up your own drug and alcohol testing company so that you can drug test your kids.
Yeah, I mean, all me and my so I have 5 boys in my family, and I was the youngest of 5. And it was, I was in 6th grade, and I'm like, I don't know what any of this stuff is, right? But yeah, I mean, it was kind of always that running joke where you couldn't come over to my house because my dad would have a drug and alcohol test ready
It's gonna
for
make
you.
you pee
But
in a cup.
exactly that and the breathalyzer. So it's like you couldn't get away from it. But now is a good time.
That's hilarious. Well, I know when you and I have just been introduced recently to one another, and one of the things that caught my attention about you guys is it seems like, like you said, you're kind of new and up and coming, and you seem to put an emphasis on getting like quality content out there to your customers, and that was intriguing to me. You don't see that a lot. You're starting to see it more and more with some of the more traditional brokers out there, but I thought that was interesting. Can you tell us about that and kind of pushing out content to your customers?
Yeah, absolutely. So we have conversations every day. We have, I think, 9 producers, and we have conversations with customers every day about subjects on, deductibles and liabilities and costs and coverages and claims. And we have these conversations over and over and over. And so for us, we know these subjects inside and out. And while it's not a dumb question, we repeat ourselves a lot. And as a human being, you kind of grow the expectation that, well, why doesn't everybody know this? Right? Like, why doesn't everybody know why this particular a vehicle maintenance breakdown usually isn't covered in a tow, or why these problems with towing are an issue, or what's going on? And so I don't know why it took us forever. It took me forever to decide, hey, look, we're just having that one conversation with that one customer. And so we really need to record these conversations and put them out. And YouTube is such an easy platform to throw these out so that in our conversations, in our emails with customers, we can send them a video and say, hey, here's sort of a recap of what we discussed, or here's some more information on auto hauling or towing and some of the subjects that we have in the conversations that we have over and over and over. And mainly, insurance, and you probably have seen this, Brandon, all industries that sell services to truckers, the phone and email method is a bloody kind of red ocean. And for us, we compete in that space. We get it. You have to do calling. You have to call these guys and let them know of your services. But I would prefer to meet a lot of these guys where they're at, which is on the platforms that we're posting content to.
Yeah.
And so that's important to us. And so for us, if a customer or potential customer can see us and say, oh, these guys look like a decent option, there's so many options in insurance. You can get confused easily. I think it's important for me, obviously for my job, we are a trucking specific firm, a commercial specific firm. It's easy to get a quote from somebody that isn't. And then when you purchase, well, now, do you get all the service that you need? Trucking is so specific on certificates and coverages and certain situations. It's really frustrating to not have that service. And so we like to highlight that we offer that and you should know about it. And so I think these platforms offer a really good way to communicate that in a way that's not so annoying as a caller and, all the ways we typically get marketed to.
Yeah, I mean, we were the same way. That's one of the reasons. So I was at a large law firm before I started Trucksafe and went off on my own. But one of the primary driving factors for why I wanted to go off on my own was because I just felt like kind of the same way, that there just wasn't that great of a quality or quantity of content out there about all of the DOT regulations. So less about insurance and more about the regulations. Just like insurance, when it comes to the regulations, there's a lot that goes into it, and you can handle it the traditional way and explain that on the phone or by email hundreds of times over and over and over. But why don't we just put it together once in a piece of content that can then live on forever, and obviously making updates as things change. Yeah. This isn't static information, it's dynamic, but at least we've got a base of good content out there that then we can then get out to the masses, and people can find it on their own time, and then also that we can just send it out to our clients that have a specific question that we've already addressed. So it's been very helpful to us as well.
Yeah. And it gets my agents, a lot of my agents are participating, and it allows our customers to get to know them better. If we're marketing to somebody in Indiana or North Carolina or Florida, the odds of us ever meeting face to face, almost zero. I mean, oftentimes our customers will come in if they're driving through, but it gets them a chance to meet them and get to know them better and know that they're going to be part of the industry longer than just a couple months. So
Yeah, makes sense. Well, you mentioned all of the types of coverages that are available to fleets, and as I mentioned at the start, and I'm sure you agree, insurance is always top of mind for fleets, and so for those who are just kind of new to the industry or new to trying to get their minds wrapped around insurance coverages, I wonder if you can help us break down the most popular types of coverages that fleets need.
Yeah, of course. So you have the main three. Everybody is most likely familiar. You have your auto liability, which covers the damage that you cause based on your actions to another party. Either it's their bodily injury or their property damage. So it could be their vehicle or their home or whatever damage that you're causing. That's the liability. Typically, most carriers are at around $1 million or $2 million. You have your physical damage, which covers the cost to replace the vehicle, the trailer, any of the equipment that you're using there, which has been a big concern with insurance, has been a big problem the last 2 years, the physical damage. You have your motor carrier or your motor truck cargo, which is obviously the cargo that you're hauling. Everybody's going to require that. If you don't have that, you're in a big problem. So those are the big three. In addition to that, fleets typically add on, the workers' compensation for the employees, the general liability for the operations that are happening outside of just the trucking. And then the big, fleet expense on insurance that they're most likely all going to have is the excess, which is essentially an umbrella type policy that takes your limits of insurance. So if we say you have $1 million in auto liability, fleets are a big target for lawsuits. We can talk about this. Fleets are you've seen signs. I don't know how many are in Indiana as far as hit by a trucker. Yeah. Anyway, so they're a big target. And so typically some of these situations could cost more than $1 million. And so an excess policy will take that million and raise it up to 3, 4, 5 million. And so essentially you have $5 million of insurance coverage for any particular situation. And that can either go over one aspect of your policy or an umbrella and cover all aspects of the policy, whether it's the motor cargo or the physical damage or the liability. So yeah, those are the main coverages that insurance carrier or that fleets typically have or require.
Yeah, and that excess coverage is critical for the reasons you've mentioned. We work with so many fleets that just have the minimum that they need in order to be able to get the license from the DOT to be able to operate. So they end up with, the minimum for general commodity carriers is $750,000 of commercial auto liability insurance, and that's it. Unless you're a household goods mover, the regs don't require you to have cargo coverage. The regs don't require you to have any other coverage except commercial auto liability insurance. But what we see and what we've harped on for years at this point is that minimum coverage is if you get involved in any significant accident, and it doesn't even have to be fatality accidents. It could just be injury or significant property damage. You're very quickly going to exhaust that first level of coverage, and you're going to be in trouble because then they're potentially going to be coming after your assets. And so that umbrella policy is critical as you start to get into accidents of any significance whatsoever. And then you start to look at the rise of these so-called nuclear verdict cases that we've seen, and these are on the rise, up over 1,000% over the last 10 years. Jury verdicts in excess of $10 million rendered against trucking companies specifically in these cases where they're most often about non-compliance issues or failing to live up to industry standards. Trucking companies are clearly in the crosshairs, and they're in the crosshairs for significant exposure. And so it's I can't overstate the importance of working with somebody like you guys to make sure you understand the exposure to your fleet, and then also make sure that you're fully covered. And it's going to cost you. There's no two ways about it. It's going to cost you, and it's going to be a significant, if not the most significant expense for you. It's going to be up there with them. And so I guess that's my other question to you, Brandon. It seems like, pretty tumultuous few years when it comes to insurance cost for fleets. I wanted to get your take on what the current landscape is.
Yeah. I mean, there's so much to unpack. I know, going back to what you were talking about, I think in '09 or '08, a typical fatality may cost an insurance carrier $200,000 or $300,000 in payout. And that wasn't uncommon. And it didn't take long. I think it was 15 or 16 where you're $1 million out the door on a fatality, no problem. I mean, that was just once the precedent started coming through on the lawsuits, then it was $1 million out the door. I go back and forth, just personally, I think an insurance limit, everybody should have adequate insurance to where if you get into a situation and you don't have enough coverage, you don't go out of business, right? And so I like the 1.5 to 2 million, but I personally struggle just because oftentimes as an insurance agent, the attorneys that are going after our customers, they only want to know the cap of the insurance policies that they have. And so,
it's too much work to go after assets.
Exactly.
So we're gonna go after the policy, and then maybe we look somewhere else for the additional recovery. Maybe we look up the chain to the brokers or the shippers.
Yeah. They just are chasing down all the policies they can on it. And so for me, if you're a large fleet, you have to have as much coverage as possible. I mean, you have assets that are easier to get after. Our customers, we walk a delicate line because if you're a smaller trucking transportation company, sometimes I think it just paints a bigger target on your back if you have a high excess policy. Large fleet owners, if you don't have 5 million, you're at a significant risk. If you have 10 million, I think you're in a better situation for sure, fleets. But for the 1 to 3 truck guys, we talk about it all the time. So anyway, to address your question, it's been an incredibly difficult 1.5 years in trucking, and you could point to a number of different aspects of it. I think if we go back to COVID, trucking was on the rise. Nobody could get enough stuff. They couldn't get it in time. Reimbursement rates were really, really high. And then you fast forward to the whiplash when you're coming down that line, and now costs are shooting up through the roof as far as the vehicle equipment on purchasing a truck, purchasing a trailer, the cost to repair, the cost to maintain, the cost of, basic or fuel and operations and employees and inflation. Those costs drove up the operations on not just a truck, but on the claims of an insurance carrier. And so I guess we can look at 2 areas in particular. If we talk about physical damage, so physical damage is the reimbursement of the value of the vehicle or the trailer that you're operating, the equipment that you're operating. And I don't know that there was ever a time like COVID that affected physical or the value of assets in trucking in the automotive industry like COVID did, right? I mean, you could purchase a vehicle and it was worth more after you purchased it it appreciated in value. I don't know of a time that ever happened, ever. And so, some of our customers, they would purchase a vehicle in 2018, let's say for 80,000, and they got into an accident in 21, they would get, let's say 70, 80,000 back. Well, to purchase that same vehicle, they'd have to pay 100,000 or 110,000. And so put yourself into the situation of a fleet that were, purchasing, if they weren't leasing vehicles, if they were purchasing vehicles at a higher physical damage value or at a higher value, and then the cost to repair in a total loss or just any repairs skyrocketed for these insurance carriers, and they weren't accurately rating for that. So the prices that we're seeing, the increase in insurance rates that we're seeing across the board are in a large part driven by physical damage corrections on. So every insurance carrier is going to say we're losing more money on liability, we're losing more money on cargo, or we're losing on workers' comp. Right now, almost across the board, insurance carriers are getting, handed to them with physical damage costs. They'll charge, let's say they'll charge $4,000 or $8,000 a year for just the physical damage on the vehicle. Well, they could be spending $20,000 on a small repair, right? And that's on a small repair. And so it's been really difficult for them to adjust. They have to go in and readjust their systems, physical damage calculations on how that works, on how new it is. And then they have to say, okay, we can't have anything that's prior this year. We can't have anything that operates in this area. We can't have these specific sensors. And so it's been a big adjustment game for us there. That's been a big driving factor of the increase in prices. It's been tough for them to adjust. And then the second, go.
I was just going to say, I mean, I don't know if you've seen this report, but I talk about this all the time. The American Transportation Research Institute, ATRI, put out a study in 2020, I believe, on the rise of nuclear verdicts in our industry. And they put out a related study about insurance costs and stuff like that. And it's consistent with what you're saying, which is it's almost like we're playing catch up now for the insurance companies. Their margins are thin already. And so now we're trying to catch up, and the way that we're catching up is by jacking up premiums, and that's ending up hurting fleets. I'll let you finish your thought, and then I've got a related question.
Yeah, it's been tough. I think the second aspect has been nuclear verdicts, and then particular third-party financed lawsuits has been on the rise for some of these guys. And what that means is a private equity or an investment type organization. This is a personal opinion. I think oftentimes those private equity groups comprise attorneys and trial attorneys, because I don't know who else would do this, look for a return in this segment. But what they do is they fund lawsuits, and they work with specific trial attorneys who go out and search for lawsuits against trucking firms. And they have a playbook. They have the exact plays that they want to run, what they're looking for. There's a term in the industry called reptile theory. Mm-hmm. And you've probably talked about it before, but reptile theory is just where they find a case that has negligence on the trucking firm, and they attack that case in a specific manner to get the most return out of it as possible. It's regardless of what the victim went through, regardless of what the carrier is actually doing, if they're, if they're really having considerable negligence or not, they're just going to go after the highest judgment possible. And that's been on the rise. There's a number of states that are trying to set rules against that. I know Louisiana was a big one just recently.
Florida just did recently as well.
Yeah. So some states are leading the charge. I think the American Trucking Association has been doing a good job. I wish so bad, I wish so badly the largest insurance carriers in the country, like if you were to say Great West and Progressive and, National Indemnity and whoever, right? Northland, I wish they would all go to Vin White or Buttigieg or whoever and say, look, we're going to stop. We're going to stop insuring anybody if you don't take this away, because it's a clear abuse of the process of the system. It's not needed. It's only hurting everybody. And it's only helping these trial attorneys that have their, private jets that are flying around to the conferences, teaching everybody how to do this. And, they have 15 homes and they're just getting incredibly wealthy of it. I wish that they would do that. We went to a conference at a Progressive conference, and they're probably the largest insurance carrier. Now, they don't have a lot of fleet, but as far as commercial insurance carrier in trucking, they're probably the largest out there. Yeah. And the CEO was there, Trish, and she was asked, hey, when are you gonna, because that was a complaint they continue to bring up, that they're getting hammered on these and they're paying out, not just on defense costs, obviously the rewards and the penal violations that they're paying out on. But it was asked, hey, when are you going to actually step up and say, we're going to get out of here if you don't stop this? And she kind of danced around it. I was surprised about it. She said, "Hey, we work with this lobbyist organization that does this and that, and we support, different trade organizations, the ATA, and to go after it." But I just think they have more power. Personal opinion, I think they have more power than they're using. I think a lot of these regulators would see, hey, if we have the biggest carriers all combined to say this is hurting the American consumer, the average American, our voter base, we need
Yeah.
to get rid of that. I think that would help quite a bit. I mean,
Right.
something's got to change. Something has to change in this area. I don't know how much higher these costs can go.
Yeah.
Um,
Yeah, I mean, really, the
and
only
it's
ones
gonna be
getting
tough.
rich out of this is the plaintiff's bar, like we've talked about.
Yeah.
If anybody's interested, go back and watch our episode 20. It was called "Combating the Reptiles," and we had Alex Miller on, who is the CEO of the Florida Trucking Association, and we also had on Bill Kanaski, who is a psychiatrist who specializes in jury coaching or witness prep for these types of cases. He does an excellent job of explaining the psychology of these plaintiffs' attorneys who implement this reptile theory and how they get into the heads of the witnesses, and that ends up blowing up the case in the favor of the plaintiff's bar. And we talked with Alex about the steps that Florida has taken to get legislation passed, tort reform legislation, to try and get control of this. But yeah, I completely agree. Unless we get control of this across the country, this is just going to continue. It's a runaway train. We're going to continue to see these costs skyrocket.
Yeah. I mean, for your listeners that are the safety person at a fleet doing the training, that reptile theory, I mean, I need to go back and watch episode 20, seeing the difference of how they set it up. We went to one last year and it was so fascinating because they had a good and a bad example. And the bad example was the trial attorney was saying, or the plaintiff's bar was saying, "Hey, is a truck heavy? Yes. Is it hard to stop? Yes. Is it a danger to society? Yes." Right.
Mm-hmm.
And then he stopped the tape and said, "We just lost that case," just because he said yes every time. Right. And then the good example was, "Is a truck heavy? Well, it depends." Is a truck fast? Well, I don't know how fast they're going, and so there's such a strategy that you have to have, and your employees have to be aware of it. I had no idea of it until we saw it. They really need to be aware
Bill
of
does
that.
an incredible job. It was probably him that was presenting, if I had to
Yeah, it
guess,
probably
because
was.
he's got all of those videos of here's where things can really go wrong if you don't have your witnesses appropriately prepped, and here's the better way to handle it. So yeah, he does a great job. But along similar lines, I'm curious your thoughts on, because something that we've heard the FMCSA talk about several times over the years. We've heard Congress get involved with this. Is this idea of raising the minimum insurance limits for carriers? We've had the same minimum insurance limit of $750,000 in place since the mid '80s. The minimum has not risen since the '80s, and so it's been artificially suppressed. It hasn't tracked with inflation or anything over that same time period. So now, every once in a while, there's Congress comes out with a bill toying around with a new limit of $1 million. I've also heard $2 million. We're also seeing some states like New Jersey go out on their own and raising the minimum limit for carriers operating in their states. So I'm curious to know your thoughts on that and how that may impact the cost of insurance going forward.
Yeah, it's a big subject, and we'll talk. I'll kind of end with the New Jersey portion. I listened to Jim Mullins. He was the FMCSA director under Trump. This was in March. And we talked about that subject. And he said, number one, 750 is kind of like the Amazon Prime $75. They didn't know, nobody knows why that number was that number. And I think in the 80s, that was a high number. It was kind of overestimated to what any damages could get to. His point of view was it'll never happen. It'll never increase. And I get why he said that. There's so many organizations that are going to challenge that. Yeah, I mean, look at some of these rules. You and I have been involved in the trucking industry for so long, and you can pull up probably 5 or 6 subjects. I know there was one specific rule that was interesting. It was the drug testing consortium of positive test results, and it was kicked down the road maybe 7 or 8 years.
Yeah, it was the
So
clearinghouse, and we didn't see it come
the
into
clearinghouse,
effect
that's right.
until 2020. Yeah,
Right. And I remember hearing about that in 2010, 2011, and it made sense. It was a perfectly reasonable rule, and so I don't know. It'd take a pretty strong personality to push that through. Any increase will drive prices up, and if you think about it this way, if you have 25 trucks on the road, let's say you just have $1 million in liability. That's $25 million that an insurance carrier is on the hook for, right? And that's a tough thing to swallow. If that were to go up to 2 million, New Jersey's at 1.5. With New Jersey doing that, I kind of expected the federal government to take notice and say, hey, we can't have New Jersey at 1.5, Colorado at 2, Idaho at 750. We can't just have a different, because essentially you got to drive around a state to deliver a package or deliver a load. And so I could see after a certain point, if there's a lawsuit that goes through, or if there's a subject, a specific scenario go through, that the FMCSA is going to adjust it. But I get why the states are doing it. I just think, I don't know if it's the answer. I actually think $1 million is a good amount of coverage to have. I think $1 million, a lot of the claim, a lot of the cost of a claim goes towards a lawsuit, goes towards defense. Very little actually goes towards the cost of the vehicle, the cost of the bodily injury damage in a traditional claim. But you could be spending $200,000, $300,000, $400,000 just in defense of that claimant or of your customer. And so the more money that you have to hold aside, that the actuaries have to calculate and say, okay, now we have a $2 million liability for every vehicle that we insure on the road. Well, it's just, the premiums are just going to go up across the board. I would be really worried about it. I get the reasoning, but I don't think it's the answer. I really don't. I don't think the majority of the money is actually going to the person injured in the accident and the equipment and the property that has to be repaired.
Yeah. That's a good point. And I'm curious the New Jersey deal is fairly recent still. It's happened within the last couple of months. I still don't know enough about it to know how they are applying it. I think there was an initial question of, hey, does this only apply to fleets that are physically operating in New Jersey, or that have a location in New Jersey, or does it apply to trucks that are just passing through New Jersey? I don't know if you know how they've applied that practically, but it does seem, to your point, it does seem like something that would be ripe for FMCSA preemption. We see FMCSA do this in other areas where they say, hey, we can't have a patchwork of state laws on this particular topic because trucking is by its nature interstate in nature. So we can't have a system where the laws change from state to state as your trucks enter those states. And it seems like, depending on how New Jersey is interpreting their own statute or applying it, that is a real risk. If maybe one state's not a big deal, but as more and more states enact different limits and they try and impose them on fleets that are just passing through, it seems like it would be a big problem.
Yeah, I guess I just wonder who's pushing for the increase. Like what groups are really pushing hard for that increase? If it's the trucking industry, then I'd have more comfort in saying, okay, maybe that's something that we need. If it's the bureaucrat, I'm so deathly scared of inflation. I am. And the upward pressures of inflation. I think that would contribute to it. So I wouldn't support it. I really wouldn't. I would rather, let's try to figure this out under $1 million. And if they wanted to increase it to $1 million, these insurance carriers play funny games too, because what they'll do is they'll post your filing at 750, even if you pay for $1 million, right?
Mm-hmm. Yep.
And it doesn't matter to most carriers. Sometimes a broker will ask for an updated filing, and then they'll have to do that. But the reason they do that is,
I was going to say, do they do that to make them less of a target, to make it look like they have less than they actually do?
That's exactly. Well, what they do is if a smaller carrier goes out of business and a claim is filed, like let's say they stop paying their bill 4 months in,
Hmm.
and a claim is filed after that, then they're only on the hook for 750.
Yeah.
So it
Yeah.
limits their liability a little bit there. So they game it a little bit, which is nice for them. It could save them 250K on a policy they
Yeah.
lost just incredible amount of money on.
Right.
So yeah, I'm
Well, and the other
I'm
thing that
happy with
doesn't
it.
help is the FMCSA's process for filing insurance because they have a kind of an antiquated registration system that requires you to go in and tell the FMCSA what types of commodities you're hauling, and if you pick the wrong commodity, it may then tell you, hey, for that type of commodity, you got to have $1 million on file or this and that. So usually if you're just selecting general commodities, then the system should only tell you that you have to have 750,000 on file. So then that's what ends up getting filed. So
Yeah.
with
Yeah,
we're kind of running out of time here, but I definitely want to hit
yeah.
on. So that's kind of the current landscape. I'm curious for your thoughts on, with that being the picture and that being what fleets are up against, what in your view are some of the key things that fleets can do to put themselves in a better light when it comes to either getting
Yeah.
placed with a new insurance carrier or when they're up for renewal? What concrete steps can they take to make them a more attractive candidate?
Yeah. Well, so you have to break out fleets in a couple different groups. Let's just separate it into two groups. So you have your established fleets. Traditionally speaking, your established fleets have a very good relationship with their carrier, and you're making marginal changes to your operation to like kind of macroeconomics to affect the whole. And so those changes for large fleets are fairly small. It could be, you have to assume the culture of safety are in those fleets already, to where you have your safety department, you have your paperwork up in your maintenance group, and everybody's locked in and dialed in to say, hey, we're trying to get this goal to lower our rates and lower our claims and lower our crashes and our accidents. We want to get everybody safe home. That's the culture. How do we get there? So that's always going to be in the front of mind in a large fleet, right? So I'm going to focus a little bit more on let's call it the emerging fleet. Let's say you're 15, 25, 50 vehicles, and you're getting into the role of a safety. You're where you need a full-time safety person. Well, number one, you got to go to Trucksafe. You got to get on there. You got to figure out what
Shameless
compliance
plug.
issues you're going to have. There you go. But number two, there's really there's no replacement for culture. And it's such a shift for new fleets because you're growing, you're trying to raise money, you're trying to hire, you're trying to recruit, you're trying to do all these things, operations, you're trying to do everything to grow the company. Well, a big part of that is you're going to have to get to a point where you need a full-time safety person that focuses on reducing the number of accidents and claims and crashes that you have. And it has to get to the point where the person that starts in that role or at a different role and transitions to this new role, they have to be good at instilling that culture in the company. So it's not just a fake thing that you talk about in an audit when the insurance guy comes and goes over your safety practices. It's a weekly, you talk about it in meetings, you talk about it daily. You really, truly want everybody to come home safe. You really, truly want to reduce the number of accidents and the number of crashes and the number of claims. So that's the underlying issue that you have to have that in your company, in your fleet, if you're going to be successful.
Yeah, we talk about it a lot about having the foundation there. You have to build the foundation, and it takes work. You have to have the right people in place. You have to have the right policies and procedures in place because it's as you said, it's easy to get quickly over your skis in this area where you've been worried about the operations and the finance, and that makes sense. You're running a business, but if you don't take the time and the effort to put in the safety and compliance related foundations, then you're just going to be putting band-aids on things as they go along, and you're not going to have the underlying things in place to keep those things from occurring. And so they're just going to keep piling up until now all of a sudden you've either got the DOT knocking at your door to do an audit and potentially shutting you down or issuing serious fines. But, obviously the bigger concern is that you get involved in one of these serious accidents and now it's lights out because of a nuclear verdict or a nuclear settlement in those cases. So it's key that you have those foundations in place. For sure.
Yeah, and it's something that insurance carriers want fleets, but they are afraid of fleets. They're afraid of bad fleets because that could sink them. I mean, that could let those underwriters and those managers lose their job. So they're going to be very strict, especially right now, on what they're looking at and what they're interested in entertaining. Because if they feel like, hey, there's going to be a severity problem, how high of a claim can be, and then they add a frequency to that. There's more than one in a year or more than a couple in a certain time frame. I mean, you're going to be in a very difficult situation. And then if you don't have insurance, you're out. So a couple things. I don't know how much time you have, or you can let me go on
for
this. If you are an emerging fleet, there's a few policies that you may not be familiar with that we can talk about, right? The traditional policy, guaranteed cost, everybody's familiar with that. Here's your price that you pay for the year if you don't make any changes, right? Let's say it's $8,000 a truck. All right, you have 10 trucks, you're paying $80,000 for all the coverages. That's guaranteed cost. Okay, so that's what you're familiar with. Let's talk about a large deductible or kind of a self-insurance policy. Okay, these are more common as you get in a higher vehicle fleet situation where you're sharing the cost of insurance. Okay, a typical situation would be your deductible would be $25,000, right? So you're sharing the cost to repair any of these vehicles, potentially a liability claim as well. You're going to pay the first $25,000 and they'll pay everything after that. But it's very common on a physical damage situation. Insurance companies love that because right now
the risk is transferred back to the customer.
Exactly. And you could say, hey, I like my maintenance guys. I like my area of operations. We don't get in a lot of accidents around town, right? Let's say you're in Florida, but you're not Miami. You're in the Northwest, right? And you don't get into a lot of accidents. You could negotiate and say, I want a higher deductible, right, than what we currently have. And you could go 25,000, very common. You could go as high as you want, so long as you can afford that. If multiple vehicles were getting into an accident, you don't go out of business, right? That is a really good cost savings method for negotiating your insurance policy at renewal for these lower fleet guys, right? Okay, that's number one. Number two, if you're not familiar with what a captive insurance program is, you need to find out what that is. Not everybody qualifies. Not everybody is a good fit for it, but it is an incredible way to typically when you find somebody in a captive, they will never leave that situation, like period. And just to explain what a captive is, so let's say Brandon and Brandon right here, we have a similar company. We have 100 trucks each. We're going to go and self-insure each other, right? So we're going to put $1 million in every year for insurance. So there's $2 million that go towards insurance payments on physical damage, liability, whatever that is, right? If we have a good year and don't have many claims, we could get up to 40% of that money that we've paid in to insurance back at the end of the year. So that's a 30-second explanation of what a captive insurance program is. There's a number of very popular ones. Great West has a really good one. Wheels, there's a number of captive trucking specific captive programs out there. Now, here's the deal. It's like a dating site, right? Like you have to absolutely dress your company up and you have to put on lipstick on every driver. You got to make sure you're showing the best of yourself because they don't have to let you in their club.
Yeah.
And you have to be big enough. You have to pay enough premium. It has to make enough sense to add you. But then on the other end, they're going to say, look, your claims affect me. And so they don't want anybody that's just going to be flying by the seat of their pants that has, no real plan or no real culture. And they're really going to make sure each member is kind of the insurance underwriter, and they take it personal.
Yeah.
And then, they have their yearly visit in the Caymans. They all fly their planes to. It's a kind of a cool deal. But
well, the other good thing with captives that I've seen, because we work with a lot of them, is that most of them will also be there as a resource to these fleets.
Right.
Obviously, everybody's interests are aligned in terms of minimizing the occurrence of non-compliance and accidents. And so what that means practically is that they'll bring in resources and then make those available for captive members, whether it's some kind of technology, deals on technology, deals on cameras for trucks, or deals on compliance services from consultants or like us or whatever. The captives are great, it seems like, from an outsider's perspective of providing those resources with the hope of making all of the members better from a safety and compliance standpoint.
Yeah. So that, if you've never heard of that, talk to your agent, talk to us, whoever you need to talk to, look into it. If you have enough in premium, you may qualify. It could take you a couple years to qualify. And then there's a decent amount of investment involved. But once you're fully vested, once you're a couple years in, it's tough to beat. I mean, there's no way they're exiting unless they're kicked out. Okay, if we're going to a more established fleet, couple things. Number one, you have to know your stats. You have to know where your claims are happening. So let's say all claims are or 90% of claims happening on reverse, right? So I've seen a company that, it's not a trucking company, contractor, builder. 90% of their claims are when they were reversing. So they never reversed out of a parking spot. If they ever parked, they had to reverse into that parking spot, and they would pull forward out of it. And that's all they talked about for 30 minutes of every meeting. It was like how to reverse out, how to pull forward out of your parking spot, right? But for most trucking companies, for most large fleets, you got to know where your claims are happening. First year drivers are typically, no matter how much experience they have, the largest risk of a claim, right? How do you improve that process, right? UPS only turns right. So many of these different companies do little things in their operations that take away a large portion of their claims. So identify what's happening in every single claim. It's monotonous. It's difficult. Your insurance agent should help you line up all the claims you've had in a certain time frame and say, categorize it, right? What did the driver do? Where did they mess up? Where did we mess up? Was it a maintenance thing? And then make one big change to fix that, right? And see how it affects it.
We talk about this on the compliance side
yeah.
too, looking for trends, because if you find a trend, a negative trend in your compliance data, that's the thing you need to tackle first and get control of that trend. And then you can worry about the other things that are contributing less to your high CSA scores. For example, if you buck the trend, that is the name of the game.
I mean, and that's going to give you the most brownie points for your insurance carrier. For, I'm sure, upper management, they're going to see, wow, that was a big change. From there, it's just small changes. And then this last thing is for everybody. There has been an incredible uptick in issues with SMS scores and their federal. You were talking about it earlier today. I think the federal government is inadequate at best at tracking safety for each carrier, for carriers in general. But there has been an incredible uptick on incorrect assignments to DOT numbers on safety scores. And it's really added a lot of extra work on our end, on the insurance agent side, because we go back to the carrier and say, take us through these situations. And they said, those situations never happened. All right, well, now we got to go to data queue. We got to take those off. We got to adjust those. Well, if you only have a couple weeks left to your renewal, we're in a tough spot.
Yeah.
So
it's not getting done in that time frame.
No. And so for a fleet and for a small carrier, check your public records, check everything that's going under your DOT. These guys, I think these state troopers are overwhelmed. They're putting the wrong DOT numbers in. They're putting the wrong information in, and that's going against your score. We've had this year, I don't know why, this year, for whatever reason, an incredible increase in incorrect safer scores. And, almost all insurance carriers, they just take a quick of their 10 things they look at, Safer Score is one of them, and they just take a quick view at where they're at, and then they rate the company, and it could go, up for no reason. So that's a big thing that everybody needs to be checking on that.
Yeah, at least monthly. Those
Right.
The system updates monthly, and so you need to be checking what data has been put on your. So it drives me crazy how many fleets I talk with don't even know about SMS. And it makes sense for some fleets that don't have a ton of inspections. But if you've got a sizable fleet and your trucks are getting pulled over for inspections, you better be sure you understand what violations are being put into the system, because those are driving up your scores, and those scores are used by so many, not just insurance. They're used by your customers, your broker and shipper customers, to determine whether they want to do business with you. They're certainly used by the plaintiff's bar if, God forbid, you get involved in a bad accident. So yeah, you got to be watching that stuff. Yeah,
and even if you're plugging along and no inspections, you don't know how many are being put under your DOT erroneously.
Right.
And it's so odd. It's happening quite a bit now, and so you just have to be checking it.
Yeah. Well, Brandon, we're out of time. We could have talked about that probably for 2 more hours, so we'll have to have you back on at some point for sure. But before we leave here, where can folks find you, find out more information about UCI so they can get in touch with you if they have any questions?
Yeah, check us out. You can check us out online, www.unitedcommercialinsurance.com, unitedcommercialinsurance.com. You can search us on YouTube, also Facebook and Instagram. LinkedIn, and then 208-229-8222. I would love to help you out. Give us a call.
Awesome. Well, thanks so much for joining me. Really appreciate it. We're going to wrap it up here, everybody. Thanks so much for tuning in. Stay tuned for updates on future shows. You can check out all of our past episodes over at trucksafelive.com. Submit new show ideas if you've got any of those. We'd love to hear from you. What else we got going on? We mentioned a lot of the stuff that we got going on up front of this episode. So if there's anything we can ever do for you, don't hesitate to reach out, and we'll be happy to jump in and help out as we can. Thanks, everybody. We'll catch you next time.